Okay, hey everyone, welcome back. Just a quick sound check and we'll get through it. A lot to cover. Okay, audio should be coming out okay. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objective, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFD and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, as usual, just a quick session guidelines. All questions are to be in English. Session will be conducted in English. Please do not spam and respect one another and be respectful. Please ask relevant questions. And we'll get started right away. We got ADP in 14 minutes. I don't think that's going to have a huge impact in the market because the market is just waiting for what the FOMC is going to be saying tonight, right? Just a quick update on a couple of stuff. We got the RBA hiking interest rates by 25 basis points yesterday. That was a surprise bump up from 15 consensus. I'll be honest with you. I was expecting one, maybe in June or July actually. But yeah, they hike interest rate by 25 basis points. It's now 0.35%, and more to come. That's basically the notes from the RBA meeting minutes. Sorry, not meeting minutes, from the RBA meeting yesterday. Okay. So, good evening, good morning, good afternoon, depending on where you are. So we got the FOMC tonight. That's definitely going to be the focus for tonight. The expected number is a bump up to 1% from 0.5%. So that's basically a 50 basis point hike. And that's going to happen in about, I believe, 5 hours. Let me just double check. But it's going by GMT right now. We are looking at 6 p.m. GMT for the interest rate decision, and then 6:30 for the press conference. Also, just to note, at the same time the interest rate decision is going to be released tonight, President Biden is also going to talk about economic growth. So a lot of stuff happening this week. Also, we got we're going to take a look at oil, right? We're finally going to take a look at oil. We have news coming out from the European Council that they are proposing a ban of Russian oil, right? And then we have, some of you probably know about this, we've got the issues, the rumors going around that on May 9th, there might be some announcements from Russia. Kremlin is saying, no, it's all nonsense, but we've heard this before. The previous time they start the invasion to Ukraine, and yeah, so 9th of May, I believe it's called Victory Day. I believe it's victory over the Nazi in World War II. I believe that's May 9th. They might actually use that date to potentially declare war properly, which, surprise, surprise to all of us, it hasn't actually been formally announced or declared. Right, we are going to talk about the event. We're going to take a look. By the way, if you guys have any questions on anything that you might be trading or keeping an eye out on, we're going to talk about those. So just type it in and we'll take a look at that. We are going to talk about gold as well and pound USD. But I am actually going to start with Euro USD right now. If you guys watched the outlook on Monday, I did talk about 1.05 for Euro USD, and that's basically, where price is pivoting around right now. It's not really dropping off. It's not really pushing up any higher. For those that trades intraday, there's actually a support trend line right now on the hourly. Price is below the Ichimoku cloud. It's, we are still looking at 1.0525 as kind of a cap. We literally have 1.0575 as a resistance for Euro USD. Now, if you are trading Euro USD, just be a little bit more careful. Right now, it is still range bound. We could see potential bounce off on the Euro USD, Pound USD, and the Aussie USD. Actually, there's a little bit of a shift in the orders. Net short is actually increasing. Now, we look at this as more of a contrarian outlook. So if people are actually net short, we want to be a little bit more cautious because there could be a slight bump up. Now, that said, we'll talk about that when we come to the dollar yen. But right now, Euro USD hourly, we do have support trend line forming on the hourly time frame. It is kind of choppy. It is range bound, pivoting at 1.05. Now, if you're planning on taking a trade on the Euro USD, just be a little mindful. If you take a look at the whole picture, it is still pointing to the downside. Momentum is still below 20, so we could see the downtrend continues if we actually break the support trend line that we have on the hourly time frame. That would mean a consistent close below 1.05 on the daily. At least that's what it is on the daily. I'm not seeing any signs of potential recovery yet on the Euro USD. I believe this is one of the few pairs that we are not looking on tracking any changes in terms of trends. I do track a potential change on the Aussie USD and the Pound USD, but on the majors, the Euro USD remains, all the momentum still points to the downside. We're still looking at downside potential on the Euro USD. So hourly time frame, we got a support trend line forming. I believe this is on the 2nd of May. If you draw a trend line from the 2nd of May low until 3rd of May low, 3rd of May 7 UTC plus 1, so yeah, GMT 00. Just be a little bit more cautious with this one. Just draw that trend line. You'll have that trend line. If we do have that close, at least on the hourly time frame, then we are actually potentially tracking even lower on the Euro USD. In terms of support to the downside, what is below 1.05? For that, we actually need to track a longer period. We are actually looking at, I believe, 1.0350. Now, if you take that away, that's around 2nd of January 2017. So that's kind of the next support for Euro USD. That means we're looking at about 150 pips to the downside for Euro USD. If it does break below the support trend line or consistently close on the daily below 1.05. Okay, 1.05 is a strong psychological key levels. So I'm not going to take it too lightly. I think we could see support building up right now for Euro USD. But with the situation right now in the Eurozone, I believe it's just closer to where the action is right now. Just be a little bit more cautious with how the euro is. Unlike Bank of England, ECB is still dovish. So we don't actually have any hawkish stance from the central bank in terms of the euro. Okay. Next up, I want to jump straight into dollar yen. By the way, if you have any requests, do type it in the chat, and I'll have a look at the currency pairs you want me to have a look at, and we'll talk about gold after this. But let's talk about the dollar yen for a minute here. This is overextended. When we say overextended, this is past, I believe, 20 years high on the dollar yen. We're seeing signs of exhaustion. There are slight bearish divergences being formed right now on the dollar yen. It's having a hard time breaking or maintaining a position above 130 on the dollar yen. So if you take a look at the dollar strength, it's been going on strong, right? We haven't seen a break with the FOMC tonight. Now, I don't think there's going to be a surprise to the upside for the FOMC. In that context, FOMC could hike by 25 basis point and disappoint the market because the market is expecting 50 basis point. If they hike by 50 basis point, it's just meeting market expectation as well. So unless there are notes attached to it, I don't think there could be a surprise to the upside for tonight's event with the FOMC. So there are two scenarios, right? Either the market's just going to be scared with how FOMC is doing it by hiking 50 basis points. That is hawkish, much more hawkish than what they were 2 months ago. If they do hike by 50 basis points, we could either, there's definitely going to be two scenarios, right? Either we see the dollar strengthen or the dollar fall off. I am more concerned with how the order book is, how there are actually more net short, by the way, if you are wondering what I'm talking about. We do have numbers, not from a single broker, but kind of an average on a lot of brokers, that most of the positions on the dollar are they're actually net short the dollar. In that context, we could see a little bit of a short-term technical correction on the US dollar. We haven't seen the dollar weaken significantly for quite a period of time. We could potentially see that happen tonight. So just be a little bit more cautious. Don't go into the market thinking that, the US dollar is just going to go on strong and so forth. Look, the market has been pricing in tonight's event, the FOMC interest rate hike, for a good month and a half. Right? The FOMC gave the warning out for about a month and a half that they might potentially hike more than 25 basis points. So the worst case scenario is FOMC only hikes by 25 basis points, and that should be considered as negative for the US dollar. It should be considered more of a dovish tone. But if they do hike by 50 basis points, they're also going to tell the market, hey, we are going to do what we say, right? So again, there's a lot of different factors playing in to tonight's FOMC. It's not going to be as simple as, I'm hiking interest rate tonight, and that should be the case. Just be prepared that we might see a little bit of a short-term US dollar correction. I don't know how the market's going to react, but what I can tell you is that there are signs that, like the Aussie USD, for example, and the pound USD, all other currencies are, they're not really correlated right now. So maybe take a look at them individually. But if we jump into the Aussie USD and the pound USD later on, there are concerns that, we could be seeing support being built up right now. Okay, so dollar yen. A lot of people are going to focus on 130, and this is there's a little bit of a correlation with the 10-year Treasury yield. I'll take a look at that in a minute, as well as the VIX that's dropping down. So we have seen market that was risk averse last week and earlier this week. I think it's kind of quiet earlier this week. It's actually a little bit quiet. Okay, so dollar yen daily. I am concerned with how the daily momentum is showing up to be. There is actually a slight Class A bearish divergence. Again, it's not going to be confirmed until we actually pull down a little bit lower below 128. But on the hourly, this is actually pretty flat. So there's going to be an opportunity to trade today. There's going to be a breakout today. I'm just anticipating the range right now, so bear with me for a second here. Overall, the momentum on the short term still points to the upside, but the range is actually shrinking. Now, if we see a range that's actually shrinking, then there's a likelihood of a potential breakout. ADP 247, consensus 395,000. That's lower than expected. At this point in time, again, as I mentioned, I don't think we're going to be looking at a lot of changes in terms of how ADP impacts the market. I don't think people are actually going to be focused on ADP. I think a lot of them are just going to be focused on the NFP tonight. Now, when we talk about the range getting smaller, this is just a rough sketch, but let me just illustrate that for you. We are actually looking at a range that's getting smaller and smaller. In terms of the range that I would like to use, I would not want to be using a trend line, resistance trend line, or a support trend line that's sloping. I would much prefer to take two levels. Okay, one is actually at 130.50, and the other one go a bit lower, actually about 129.42. So yeah, this is about 100 pip range. We are actually right in the middle. If you are thinking of trading the dollar yen tonight, then wait for a breakout to happen. When I say a breakout, it's not just a small range breakout. If you're trading on a 50-minute time frame, then there's a lot of risk involved with what's going on tonight. If you are planning to see that, you know, the market noise dissipates away, and then you can see where the short-term trend is going to be, then focus a little bit more on this two level, 130.50 and around 129.50. That's about 100 pip range. We are actually right in the middle of that range. So just wait for a breakout above 130.50 or below that. Right now, if you're planning to take a trade, then, you know, I would actually prefer to be long once price is able to stay above 130, but momentum still points to the downside. There's a lot of risk involved. I'm not taking a jab at the dollar yen right now, because right now it is actually inside the Ishimoku cloud as well. So to be clear, that would be the breakout level if you're planning to go long. If you are planning to go short, then this will be the breakout level. Then the other side will be your stop losses, right around there. So there's two scenarios. There's always going to be two scenarios, but literally right now we're in the middle of it. So there's actually going to be two scenarios for the dollar yen. In terms of target to the upside, obviously we're going to be looking at 132, and then in terms of support to the downside, we have 127.50. So around 200 pips to the downside, around 150 pips to the upside on the dollar yen. My take on this, as I said, there could be a technical correction on the dollar strength. You might not see it now, but when we talk about the pound USD and the Aussie USD, then you'll start noticing it later on. In fact, if we go to gold right now, you can see that starting to happen here with the daily, gold on the daily. The momentum is turning around. We don't have confirmation as of yet. In terms of support, we are, we do have a little bit of support here from the 25th of January high. That's around 1850. Again, that's kind of in the middle range, because on the outlook, I did mention that we could potentially see a move towards 1825, and that would be another significant support level for gold. Now, if you're wondering, what's my view on gold on the hourly, we'll take a look at that in a minute, but I'm just going to warn you, I don't know if this turnaround is going to happen tonight, or is it going to happen on the 9th of May. That's why I brought up those dates. But we are looking at, a potential technical correction to happen. Again, gold has been sliding down because how the FOMC is perceived to be. But right now we do have support at 1850 in terms of the hourly time frame. We are below the Ishimoku cloud, so keep that in mind. In terms of preference, I prefer to go short gold intraday if it breaks below 1860, or at least out of that Ishimoku cloud. It's right. It's actually inside the Ishimoku cloud right now. In terms of momentum, we could see a little bit of a push to the downside. Again, if you're new with stochastics, it's not an indicator of how far an asset can go. It kind of gives you the momentum or the sentiment in market. But right now, I'm not seeing any potential divergences. I'm not seeing a hidden bearish at this point in time. But yeah, for gold, if you're swing trading, then keep that in mind that we might see a potential US dollar correction. If you're trading it intraday, then I would prefer to go short once we're below this level. That's below 1860. If we're below 1860, you can have your stop losses around 1878, 1880. In terms of target, then you could be looking at 1850 or go for 1825, right? But that's gold. In terms of intraday momentum, we need about an hour or two to confirm the close on the stochastics, and ideally I want to see a close below 1860 before triggering a short. If you're planning to go long right now on gold, it's too risky. Even for an intraday trade, it is risky because it's still going to be inside the Ishimoku cloud, and we are actually not going to be in the clear until we reach about 1890. By then, it's just so close to 1900. So that's my take on gold. I don't think this is scalping range. We are looking at $35 of potential move to the downside, and about $18 to $20 of potential resistance for gold. Okay, so yeah, I'm just going through the chat right now. Crude oil, we're going to talk about crude oil. We're going to talk about pound USD. We'll take a look at Euro AUD. Pound USD in the upcoming days. Yes, I'm actually planning to do that. Right, Aussie yen. Well, we'll talk about Aussie yen and why I'm actually looking at 1991, and that seems to work out pretty well. Let's talk about pound USD for now, and I want to show you the daily. Okay, so if you take a look at the daily for pound USD, overall this is still pointing to the downside. The only concern that I have with pound USD is that it's at 1.25. 1.25 it's not just a number. It's actually a really strong psychological number. It's how do you go? It's $1.25, right? So yeah. It is a number. It's a psychological number. It's not just any psychological number. It is a strong one. It's 1.25. Now, in terms of the stochastics, why I'm a little bit concerned about how the pound USD or the Aussie USD and the dollar yen is going to be in let's say a day or two. I'm actually concerned because I'm looking at 1.25 as that's a strong key support level. I'm looking at the stochastics here. It's crossing up. It's not above 20 level yet, but all indication aside, we are looking at an extended move on the pound USD, Aussie USD, and the dollar yen, for example. All of them are showing signs of potential for a technical correction. And in terms of Bank of England, they're hawkish, right? They're actually going to be potentially hiking rates tomorrow to 1%. Now, if you take a look at FOMC tonight, if they do hike by 50 basis points, that's going to take it to 1% as well. So Bank of England and FOMC, I don't care how the market looks at it, but both of them are going to have the interest rate at 1%. It's just how they do it that's different, right? I mean, Bank of England started earlier. FOMC started later. Bank of England has been hiking rates by about 3-4 times right now. So tomorrow will be the next one to 1%. FOMC did it once, 25 basis point, and then this one they're gonna hike 50. but it's just going to push it up to 1%. So if I take a look at the Bank of England and the FOMC, in terms of the tone, yeah, FOMC is, you know, it's just being focused a lot more by a lot of traders. But if you take a look at how the FOMC is saying they're going to be reducing their balance sheet, the Bank of England is actually going to start their bond sales tomorrow when they hike to 1%, and that's actually the same meaning as reducing their balance sheet. So if I take a look at the Bank of England and FOMC, I think both of them they have the same stance in terms of their monetary policy. In terms of execution, sure, you know, might be about a month's different, but in terms of how they're telegraphing their message, I think that's where it differs, right? The FOMC is just clear. Bank of England is just going around when they deliver their message. But Pound USD, I am concerned with 1.25. You know, if you are planning to go short on Pound USD, just be mindful of that 1.25. Now, when we take a look at the hourly time frame, it is choppy, right? If we take a look at the range right now, I would actually prefer to use this as, you know, 1.2615 as the intraday resistance, and we use that as the support. Now, where we are right now, like Euro USD and the dollar yen, we are actually in the middle of it. We got 1.24 as our key support level, 1.26 as our key resistance level. We are around 1.25. So if you take a look at the Euro USD, the dollar yen, the Pound USD, they're all about the same. We're all in the middle right now. So if you're planning to trade on the Pound USD, you either have a position right now or you're planning to have a position tonight. Just be mindful on what time frame you're trading this. If you're trading this on the hourly time frame, you know, I would actually go in a little bit earlier, around 1.2570. I don't need to wait for 1.26. But my stop losses is going to be below 1.2410. So yeah, ideally around 1.24. If you're planning to go long, in terms of target, you got a lot of choice for Pound USD. We do have a lot of room to go for Pound USD, and I much prefer that than going short Pound USD, because if we are going short Pound USD, we need to consider the strong support at 1.25 and how far down it can push below 1.25. So right now, you need to wait for a close below 1.24 if you're planning to go short. Your stop losses need to be 1.26. In terms of target, you're kind of limited to 1.2250. I believe 1.2250 was 2020 low. So yeah, I mean, if you take a look at the scenario on the Pound USD here, I much prefer to go long Pound USD once it clears off 1.2570. You know, this trade could be triggered today, tonight. Yeah, in terms of momentum, at least on the hourly time frame, I'm not seeing anything that's kind of significant or telling me that, yeah, this is still bearish. It's different from Euro, okay? Aussie USD is next. I just want to illustrate to you why I'm looking at a potential technical correction on the US dollar strength. If you take a look at the Aussie USD, this one bounces off 127.2% Fibonacci extension. By the way, I did talk about, you know, potentially looking at Fibonacci tonight, but you know, this is kind of big. We need to cover a lot of stuff, so we might push the discussion about Fibonacci to next week, once, you know, market is clear about what the FOMC is going to be doing. All right, in any case, the daily extension reached 127.2, and that's 0.7030. This is the level I mentioned in the outlook on Monday. We've seen the market turn around. Now, this is being assisted by the better, well, it's being assisted by what the RBA did yesterday. I'm looking at balance of trade. Again, negative number for the US. Anyway, it's not really important. Right. RBA hiked by 25 basis point. The market consensus was 15 basis point. I'll be honest with you, it was under my radar. I thought they're just gonna push it until after the general election on after 21st of May, which is the date for the general election in Australia. Okay. Anyway. So here's the potential scenario for the Aussie USD. We could see the momentum turn around. We could see market actually turn around from 0.7030. I think I put a note out. I'm not sure if it was on the outlook, but we are actually watching 7150. If we have a close above 7150, then we could potentially be in a long position with a stop loss below 70 cents. I wanna have it below 69.75, but in terms of target, you could be looking at a potential move up. 1-to-1 risk to reward ratio, we could potentially be looking at price pushing up closer to 74 cents on the Aussie USD. Now this is on the daily. I want to clean this off and we'll go into the hourly time frame because we do have a level to watch out for, and that is 7150. Right. So if you're planning a trade today, then keep an eye out on this level 7150. If there's an hourly close above 7150, then we could potentially trigger a further push to the upside for the Aussie USD. If we have a rejection at 7150, 7160, then this is likely going to be range bound between 7150 to 7050. In terms of range, we're looking at about 100 pips range if it does decide to go range bound. But if this one closes above 7150, I much prefer to go long than short. But make sure your stop losses are at least below 70.30, 70.25. If you can have it a bit lower, then have it below 70 cents. Okay. And then in terms of target, you could be looking at a potential return towards 73.50, 74. I'm just gonna highlight this. Those are gonna be your potential target level for Aussie USD. Okay. Next up is Aussie Yen. Now, in terms of Aussie Yen, this is how I look at whether a strong support is being formed. We see price bounces off 91. We haven't seen price pushes below 90. But if we take a look at this one, I like to use psychological numbers. That's a whole number if you want to know, or a quarter or a half. So 90 and 91, that was the level that we talked about since last week, I believe. And we've seen price bounces off 91. In terms of the stochastics, we are seeing a turnaround. Now, for the Aussie Yen, it's different, right? We know how dovish the Bank of Japan is, how they are keeping their yield cap, and they're not going to be doing much this week because it's Golden Week in Japan, so they have a week-long holiday. So I don't think Bank of Japan is going to be saying anything about the market this week. At least not on schedule or anything like that. So yeah, 1991 on the Aussie Yen on the daily. This is looking good. Potentially likely going to track back to 94. Now, am I going to be looking at anything above 94 at this point in time? Probably not. I'm still keeping an eye on 94 because we could potentially form a head and shoulder on the Aussie Yen, but we got room to go. Now, in terms of the hourly time frame, we are above the Ishimoku cloud. We have this highlighted area as a potential support right now. This is in line. We do have support at about 92. So if you're trading intraday, make sure your stop losses are below 92 if you're planning to go long. This could be a scenario. Make sure your stop losses are below 92. In terms of target, you could be targeting 93.50. That is the high over here. All right, and that's in line with 93. And then once it touches 93, that you could adjust it to 94. But at this point in time, just it's just ideal to not get too greedy and target 93. Just make sure your stop losses are below 92. Okay. That's about it for the Aussie yen. Now, if you're wondering where I get my targets or my stop losses, these are the highlighted areas for those. But I'm just gonna clear it off because you already know what I'm looking at. I'm just gonna use this instead, so you'll get where I'm aiming for. And it's also a psychological number, 93.50, right? 93.5 yen. Okay. Let me just go through. I believe there's a question on the Euro AUD. Euro AUD, next up is Euro AUD. Wow, so messy. Let me just clear this off. Right, let me clear some stuff off. I think Euro AUD is not that great. I mean, we have an RBA that just hiked interest rate, beating market expectation, 25 basis points versus 15. We still have a dovish ECB. Euro AUD, if you take a look at it from the daily perspective, if it does closes below 1.4750, I believe that's 1.4750. Yeah. Okay, there we go. This still points to the downside in terms of whether I would pick Euro or AUD. That's more bullish. I would say AUD is more bullish, and that would mean a bearish Euro AUD. On the hourly perspective, it's below the Ishimoku cloud. Momentum just turned around again, just picked up above 20 and then turned around. But if you take a look at this one, if there's a close below 1.4750, I would prefer to go short a Euro AUD. Your stop losses could be at this high. Doesn't need to be really far away. And that's already 100 pips. Now you could be targeting 1.45. That's going to give you a great risk reward ratio, but your stop losses are at least going to be about 115 pips minimum. It looks small, but that's about 115 pips. Target to the downside about 250 pips. That's for Euro AUD. I would much prefer to go short on a close below 1.4750 on the hourly time frame. I'm looking at all of this on the hourly time frame because if I look at it from the 15-minute time frame, by the time you get to FOMC tonight, it probably means nothing. So yeah, Euro AUD hourly close below 1.4750. I would prefer to go short. Stop losses above 1.4865. Target I would go for 1.45. on the Euro AUD. All right, Pound USD, yep, and then Sterling Yen. Pair seems to not move that much. Is it okay to leave the market and go nuts next week, or do you think this week is the right time to jump? I think every week is it's a good time to jump. It's just a matter of preference. Do you feel safe with FOMC tonight and then Bank of England tomorrow? If you're trading sterling, it's likely going to be the most volatile one. It depends, right? If you're trading intraday, then you probably want to trade the event. If you're not experienced enough, don't trade the event because it's no joke, right? The FOMC tonight, it's no joke. They could hike by 50 basis points, as I said, and the market could just rally up, okay? The US dollar could plummet. Now, there are a lot of factors to think about that's likely going to affect how the market reacts tonight. It could be that market has been pricing it in for maybe a month. And maybe the RBA has been the FOMC has been giving out a warning that they're going to be really hawkish for the past 2-3 weeks. So there are a lot of factors to think about. Is it okay for you to sit out? I mean, if you're not comfortable And if you're not experienced with how FOMC works, then yeah, probably stay out of it. But think about it, right? We got the FOMC, we got the NFP this week. So I think this week is actually probably the most volatile week in terms of scheduled calendars because we got the FOMC and the NFP. So what I'm saying is this: we got the FOMC tonight. It could go one way. We got the Bank of England tomorrow. It could probably change things around. And then on Friday we got the NFP. Now, why is the NFP important this time around? I've been probably saying that the NFP hasn't been important for the past 3 releases. Now, why is it going to be important? Because we got the FOMC tonight, and the NFP NFP this week is the first major economic data that's going to influence how the FOMC is going to act on their next meeting. That's why it's important. So this is probably why the week is going to be volatile. But yeah, is it okay for you to sit out? Definitely. Should you go nuts next week? If you want to, feel free. Okay, sterling yen. Let's take a look at sterling yen on the daily first. Okay, this is well above the Ichimoku cloud. We are still above 162, but between 162 and 164, around 163 right now. In terms of momentum, if Bank of England does hike tomorrow and then they announce their bond sales, I think sterling yen it's likely to go up because Bank of Japan is on holiday. But yeah, in terms of sterling yen momentum is turning around. We just need a clear cut of 164. Now, the only concern that I have with this one and the Aussie yen is that there is a potential, and this is probably not being noticed by a lot of traders. I'm just going to draw it for you. It's skewed, but regardless of whether it's or not it's skewed, you need to keep an eye out on 164. Around 164 to 164.50, because if there's a rejection there, it could potentially form this. Okay, might not notice it until I draw it for you, but it's there. Okay, now the hourly time frame. I would prefer to go long, closer to 162. It really depends on pound USD. If pound USD is able to push higher, whether or not it's because of the FOMC tonight or Bank of England tomorrow. But the cue would be from the pound USD. It's not just going to be sterling yen by itself. If cable pushes up, then we could potentially see this happen on sterling yen. Okay, so that would be the likeliest scenario for sterling yen. I much prefer to go long, closer to 162. Stop losses are going to be far though, so keep that in mind because we are still going to be looking at stop losses around 160. Yeah, in terms of target, you can play around, but once it breaks 164, then you could go towards 167 again. But right now, 164 to 164.50, you should be concerned about that as a resistance for sterling yen. Okay. But only know, I think it's going to give you a good risk to reward ratio, especially if you bring it closer to 162. You could get a good risk to reward ratio. But again, you're looking at about 200 pips risk to the downside and 200 pips potential gain to the upside for sterling yen. Okay. So yeah, Aussie yen. If I see direction in higher time frame, then scalping in 5 or 50 minutes is a good strategy. Yeah, I think that's a great strategy if you are. It depends on the higher time frame. If you're trading 5 and 50 minutes, but you look at the daily trend, it's going to be useless to you. But if you take a look at it from the hourly trend, then that's okay. All right, pound AUD. So yeah, this is how it works. You request, I have a look at it, and I'll just go through it from the questions. Okay, pound AUD. I don't think we have taken a look at pound AUD for a long time now. In terms of sterling and Aussie, which one is more hawkish? It's not a matter of being more hawkish. I think it's just a matter of just the Aussie currency being stronger at this point in time. So pound AUD, we're still going by this fib. We've still got support at 61.8%. And then we got 78.6. So let me just highlight this and then we'll go into the hourly time frame. But yeah, momentum still points to the downside. So we could see price actually continue to navigate lower. For pound AUD in terms of the hourly time frame, we are looking at that as well. It is a little bit flat, but yeah, for pound AUD, if you're planning to go short or you have gone short, there's actually a short-term, a near-term resistance that you can probably use as a potential stop loss. So if you're planning to go short on a pound AUD, you could have your stop losses there around 1.76. You could be targeting 1.7450. That's still not going to give you a good risk reward ratio, but yeah, either that or have your stop losses even further, and then it's not going to be pretty. It's not going to be ideal for a short. But in terms of pound and AUD, just like my view on the Euro AUD part just now, I'm actually looking at a stronger Aussie compared to pound and the euro. So pound AUD, I'm looking at a potential weakness on pound AUD, but let me just jump back into the Aussie USD and I'll show it to you one more time. This is the Aussie USD. Very well supported. We just had a turnaround, right? This is the pound USD. This is actually looking flat. Right now it's actually forming a pennant on the daily. If you are not clear on what I'm talking about, it's actually forming a symmetrical triangle right at the end of a pole flag. So this is actually forming a pennant. Now when we talk about pennants, it's actually very neutral. It can go either way. It could be a reversal or it could be a continuation. But it's different from how the Aussie USD was just now, right? And I'll show you the Euro USD here. It's also forming a pennant or potentially even a flag. It's actually looking more like a flag to me. But yeah, I think the Aussie is going to be stronger than the pound or the euro. All right, sterling yen. Yes, we talk about sterling yen. Yes, we have taken a look at gold. Two ways to look at gold. Okay. The daily might potentially turn around. The hourly, I think we're still looking at, yeah. If there's a close below 1860, I prefer to go short gold. Right now, it's just within the Ichimoku cloud. So, but that's your point. My point of view is this: make sure your stop losses is below this swing high. Okay. In terms of entry, I would want to have it below 1860 or at least below the Ichimoku cloud. If it does happen, then we could see the momentum turn around and we could potentially track lower in terms of target to the downside. In terms of support, we got 1850. Below 1850, we got 1825. Okay, that's for gold. But yeah. Okay, so let's open up for Q&A. If you got any questions or anything that I haven't taken a look at, you want me to take a look at. While I'm waiting for the chat, I want to talk about oil. Okay, so let's talk about oil. Let me clear off a few stuff. I don't think I need this anymore. I don't need. This is an old chart, by the way. So yeah, I'm just gonna clear it off now. This is there. I'm just gonna leave it there as souvenir. But let's take a look at the daily time frame. Look at how it's forming a triangle. support is actually a little bit flat, right? That's why I'm a little bit more focused on the 100. This is on the XBR USD. This is UK oil. In terms of resistance, we actually have a very sharp resistance trend line. Now, is it useful, or can you actually use this? In short, it depends, but that is the resistance trend line. I don't really like using the one from high up. I much prefer this one here. Just gives you a much better degree or a much better angle. Is it time to go in long? We just had OPEC announcement, by the way. That we're still looking at them not releasing their reserve supply for the June outlook, but with the I would say hold off oil a little bit until we clear things off. We just got a proposal for Russian oil ban from the European Council. Maybe next week, May 9th, that would be the day we could see a little bit more volatility in terms of oil. But oil has just picked up. If you see the movement in the past 2 hours, it has actually picked up. But yeah, this is oil. XBR USD it's actually still a little bit flat. I would wait for price to actually stay above 106 or 105. No, I much prefer 106 because if you take a look at 105, it's just it's just too far away. So 106, we might see price actually correct itself before next week. If we see that scenario, then I would be waiting around 106, right? If I'm planning to go in long on oil on XBR USD, and I'm planning to go long on XBR USD. Just a disclaimer here as well. But again, this is not for someone that's not experienced with oil. I don't think this is the right time to be jumping in and out of oil as if it's the gold market. It's not like that. It's different fundamentally and technically. They're different, and the way they move is different as well. So this is still my view is this. I'm still waiting for it. I don't think this is the right time to go in, but it's getting there. In terms of timing, I would probably wait until May 9th on Monday. I believe May 9th is on Monday, right? Just double checking, but yeah, it is on Monday. Okay, US oil, same scenario. Instead of waiting for 106, I'm actually going to be keeping an eye out on 104. So we got two different levels. I'm keeping an eye out on 104 for XCI USD. Okay, that's for oil. Nasdaq, Bitcoin. Okay, let's take a look at Bitcoin. There we go. We got Bitcoin here. Let's take a look at the much bigger picture. Wow, we're still on the old fibs. Let me just get rid of that. We don't need that. Don't need that. Don't need that. Don't need that. Yeah, we could be looking at a new fib. This one rejected 177.2%. Done. Let me just double check. This is 100%. Okay, this is a lot simpler. 37,428, 37,500. Okay, 37,500. That's not hard, and I definitely have 40,000 as a key resistance level to watch out for. So that's what we do, right? When we start out looking at stuff, we want to box it up first, and then we'll jump into a small time frame. There we go. Right now, I think there's still potential for Bitcoin weakness again. Probably not related to the FOMC. So if you guys think FOMC got stuff to do with it, yeah, in terms of sentiment, yeah, sure there is, but it's just kind of redundant if you think about something that's meant to be unregulated and then following what the FOMC is saying. That's kind of weird, right? So just keep an eye out on this one. I want to keep an eye out on this high here. Actually, we can lower the range to about 39,000. I believe so, yes. Okay, 39,000 to 39,100. 39,000, 39,001. Okay, so that's going to be your resistance to watch out for intraday. If you're wondering where that resistance is coming from, you don't need to look far. It's just from there. So if the stochastics drop below the 80 level or the RSI drops below 70 level, then you need to be careful because we might see a potential rejection here. And if you're going by fibs, this is the fib we need to go buy for. If it does break below 23.6%, then oops, we could be due for a little bit of a push lower for Bitcoin USD. In terms of target, I think it was 61.8 was the previous support level as well. So yeah, let me just highlight a few stuff. So there we go. So we're looking at support to come in around 38,000, 38,200. In terms of resistance, we're on resistance 39,000 to 39,001. Range is about $1,000 for Bitcoin USD, so be careful. I don't want to go long right now on Bitcoin unless it breaks above and close above 39,100. If it fails to close above 39,100 and the momentum turns down, you need to be careful with Bitcoin. Okay? How long have I been trading for? I've been trading for 20 years. Yeah, 2002. Now it's 2022. Okay. All right, we got Nasdaq, and I want to show you VIX and the dollar index and the 10-year treasury before we wrap up for tonight. Nasdaq. Okay, Nasdaq. So we're actually still on this in this cycle on the fib. This is why I'm potentially looking at what the FOMC is going to say tonight, and market could have the opposite reaction, or they might actually not hike by 50 basis point. They might hike just by 25 basis point, and market's going to get disappointed, or market's going to get, oh yeah, okay, it's good time to buy in the equity market and stuff like that. So I'm looking at potentially the same scenario like the pound USD, Aussie USD, and the dollar yen here. Is that there could be potential for dollar weakness here. So in terms of Nasdaq, we might be flattening out around 13,000. So let me just draw 13,000. Just check. So yeah, 13,000 to 12,750. That's the range you want to be careful about for Nasdaq. Now if you go into the hourly time frame, yeah, just be mindful of 13,000 at this point in time. In terms of resistance, we basically have this capping the market. So if we do have a close above 13,200, then you could do this. Sorry. Right, having your stop loss below 13,000 and your target level at the previous high. Swing highs around 13,450. That could be a scenario for Nasdaq. Now, if it does go below and inside the Ishimoku cloud back towards 13,000, then I might actually stay away until it actually goes through below 12,750. Okay, but if it does go below 12,750, and basically what's going to happen is this. If it does go down tonight, keep an eye out on 12,750. If it does break through that support area, then yeah, you might consider going short on the Nasdaq 100. But probability is this. In terms of timing, we might see the market dip down 13,000, 12,800. That's a lot of points, right? We're talking about 400 points to the downside. Even if there's any positive upside surprise from the FOMC, we got a lot of support for Nasdaq. So be mindful of this. If you're planning to go in long right now, I don't think it's the right time to just jump in on Nasdaq and go long. All right, we already did take a look at gold twice, so if you want to review the trade, the video, the webinar, then you can review it because we're going to wrap it up soon. Okay, just a note here on the dollar index. This is pushing really high, right? We are above 103, around 104. Now on the outlook this week, I did mention the potential for the 10-year treasury to hit 3%. We did hit 3%, and it's having a hard time sustaining above 3% right now. Depending on how the market reaction is tonight, treasury yield might go up to 3.1%. So there's still room to go for this one to 3.1%. But if you take a look at the VIX, this one is dropping down below 30, which I think we could see market eases off a little bit. So that's why in terms of upside surprise for the FOMC, it's going to be tough, right? Market is already priced in for 50 basis point hikes the past 2 weeks, 3 weeks. So yeah, what I'm worried about is that they're not going to hike by 50 basis point and they're just going to hike by 25, and that would cause a whole different scenario in the market. So extreme warning here that volatility is going to be high tonight and tomorrow and Friday. If you missed out on what I mentioned, we got the FOMC decision tonight. NFP is going to be the first data that FOMC is going to consider for their next meeting, right? This FOMC is going to be unique. Sorry, this month's NFP is going to be unique. It's unlike the past 3 months of NFP data, because back then, FOMC knows what they're going to be doing. They're going to look at this week's data for the NFP to decide what they're going to be doing in their next meeting. Okay, so just be cautious, be careful with your trading. How long did I got a question. How long did it take you to be profitable and never had anyone saying they trade for 20 years? Well, feel free to Google me. You'll see me date back really, for a long time. How long did it take me to be profitable? It took me about 1.5 years to be consistent. Profitable is a different scenario. Anyone can be profitable, but being consistent, that's a tough one. Okay. Right. So, no more questions on the chat, so we can wrap it up for tonight. Again, good luck with your trades. FOMC is going to be soon, in the next 5 hours, I believe. Just also a reminder that President Biden is going to be speaking at the same time the announcement for the rate hike is going to be about the economic growth in America. Press conference is the key thing tonight. It's not the hike, it's what the press conference is going to be, and that's going to be 30 minutes after the rate announcement. Okay, so good luck with the trades.